Hello, everyone. Today, we're going to be talking about something that's very important in trading, and that has to do with trend and understanding trends. So, in trading, there is something that we say, and that is that the trend is your friend. The trend is your friend. So, in trading, understanding the trend gives you an advantage in the market. That's why we say that the trend is your friend. Because when you understand the trend and you know how to handle and work with the trend, you'll be at an advantage spot in the market. Right? So, guys, every time we are trading or every time we want to trade, what we are majorly looking for is understanding the direction of the market. Understanding the direction of the market. Where is the market going next? What we are always doing is we're always looking for opportunities in the market. We're always looking to use historical price patterns, historical price data to determine where the market is going next. And by historical price data, I mean the candlesticks you're seeing on the chart right now. Candlesticks you're seeing on your chart is historical price data. All that represents what market has done before. All that represents what the market has done before. So what we are doing is we're trying to read all that candles, read all that data, and use it to determine where we are going next. Where are we going next? Based on what we have seen. And it starts to give us a pattern. It starts to give us a clear path towards the future. Because in the market, something that is very important is that history repeats itself a lot. When something has happened, the likelihood that it will happen again is very, very high. In the market, history repeats itself. Where market made a buy from, it is likely to make a buy from there next time. Where market made a sell from, it's likely to make a sell from there next time. That's just the way it is, right? So that is what we are trying to determine every time, and that is we want to know the direction of the market, where the market is going next. And trends, understanding trends is one very key factor that helps us determine that, understanding trends. Okay? So now, understanding trends is part of technical analysis, and technical analysis has to do with analyzing chart patterns, analyzing chart data, analyzing candlestick patterns to determine where the next trade is going to come from, where the next direction of the market is. Would it be a buy? Would it be a sell? Is it rising? Is it falling? Is it going up? Is it coming down? All of that is what we're trying to determine all the time. So when you come into a day and you want to trade, the first question you want to ask yourself is where is the trend of the market? Where is the trend of the market? We say the trend is your friend because if you walk with the trend, if you go in the direction of the trend, it's going to be well with your trading. But if you don't go with the direction of the trend will not be your friend. Trend works against you. It's like it's like trying to stop a moving train. It's like trying to stop a moving train, and that's not a very palatable thing to do. That's what happens when you walk against the trend, when you go against the trend. It's not funny, and it's not interesting. All right. So now, when it comes to trend, there are three different types of trends, and this works with how the market works itself. Okay. Now, the first one is what we call the uptrend. First one is what we call the uptrend. Now, when you look at an uptrend, or look at the market, and you're seeing the market going up in waves. Remember, the market doesn't go up in straight lines or down in straight lines. It goes up or down in waves, in swings, right? Now, look at this move we are seeing here right now. When you look with your regular eyes, you will see that overall, this is moving upwards overall. The market is moving from a low point to a high point overall. Now, in the midst of that, you see some from areas where price came down, then it rose again, then it came down, then it rose again. All of that we are seeing. But overall, you can see that price is moving from one level to another. One lower level, from a lower level to another level to a higher level, right? Absolutely. So now, when you look at a chart, when you come to a chart, any chart, you must understand that the top levels of a chart here, the outer part of the chart is what we call the highs, the high points. Call them the highs. The outer part of the chart is always the highs, while the inner part is always what we call the lows. Okay? So you have the highs of the chart and you have the lows of the chart. Now, you notice that there is a high point here and there is a low point here. The high point here is now when you look up, you see that there's another high point. But you'll notice that this high point is higher than this high. So this is the reason, even though this is a high too, remember everything on top here is a high. This is a high too, high, but this high is higher than this high. So we call this a higher high, a high that is higher than the previous high. That's a higher high. Now we have another high here, and that high is a high that is higher than the previous high. So it's called a higher high as well, right? Then we have another high. We have another high that is higher than the previous high, and we call that a higher high too, and a higher high too, just like that. Now, when price is forming higher highs like that, it tells you is an indication of an uptrend. It's an indication of an uptrend. Then you notice too that we said the bottoms here, everything here is this is the low point of the chart, right? You notice we have a low here, but this area here has a low too, is a low too. But this low is higher than this low. This low is higher than this low, so we call it a higher low. We also call this a higher low, and then we call this a higher low. Why? Because the low is higher than the previous low. Why? Because this occupies a higher level than this occupies a higher level than this. When you see a market creating higher highs and higher lows, that will give you an indication that you're in an uptrend, even though you can see it with your eyes. You can see it with your eyes, but then even though you can see it with your eyes, you're not going to trade with your eyes. You are going to trade off of certain levels. And usually when you're in an uptrend, you are mostly going after buy trades. Mostly. Not that there are no sell opportunities in an uptrend, not that there are no sell opportunities, but the buy opportunities give you the better opportunity, give you the better trades, the best trades for that session, for that season is buy trades. The best trades you can take are buy trades in an uptrend. Not like you can't sell. Like I said before, if you look now, price dropped here, that could be a sell. Price dropped here, that could be a sell. That dropped here, that could be a sell. Price dropped here, that could be a sell. But then all you are looking for is where is the larger opportunity? Where is the larger opportunity? There are times where you have some instruments who are in a trending season. They're in a trending season. And the truth is that anywhere you place a buy trade, the market will buy, you will make money. Anywhere you place the buy, there was a there was a while, I think 2 years ago or 2 or 3 years ago, when the dollar index, dollar was just rising, 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 rising. And why it was rising? Because the Federal Reserve was increasing interest rates at the time. Inflation was very high, so the Federal Reserve was increasing interest rates. The dollar was just rising, going one way. And then we had some pairs that were correlated with the dollar, like the USD JPY. I remember very well. USD JPY was just buying one way. Anywhere you placed a buy on on USD JPY at that point, you make money. That was actually the way it was. You didn't require a lot of analysis. Just enter the market, place a buy, make sure you have at least enough equity in your account. You place a buy, you make money. Now, that is not the best way to trade. But I'm just telling you that if you are in a trending market, the opportunities are bigger when you follow the direction the trend is already going. Like here now, you can see that you're in an uptrend. The opportunities are bigger in an uptrend. The buy opportunities are bigger in an uptrend. Why sell opportunities, even though they are there, but they are very limited. They are very limited, right? They are very limited. So that's what you see here. So by the time you see price is making it higher highs and higher lows, that will tell you that you are in an uptrend, even though you could see with your eyes, right? So what are we calling highs and lows now? These areas where price made a U-turn. These areas where price made a turnaround. See these areas where price made a turnaround. Hit this high, turned around, came to this low, turned around, came to this high, turned around, came here, turned around, got here, turned around, came low, turned around, turned around. So these areas here is what we call highs and lows. They are also called swing highs and swing lows. Swing highs are the ones on top, at the high points on top. Swing lows are the low points below. Swing lows are the high points on top. Swing lows are the low points below. Right? So that's for uptrends. Next one is what we call a downtrend. A downtrend is the opposite of an uptrend. And we said before that following the trend is very beneficial. The trend is your friend when you follow it. The trend will be your enemy when you don't follow it. So look at this. By the time you look at this, you see that the market is overall trending downwards. Overall, the market is trending downwards. It's going downwards. Overall, you see, market is going from a high point to a low point overall. Even though you see that there are a lot of buy moves, sell moves, buy moves, sell moves, buy moves, sell moves, but then overall the market is on a downtrend. Market is coming down. So when it comes to defining this, what we're going to look at here is, remember we said the outer part of the chart is always what we call the highs. Outer parts are the highs, while the lower parts are the lows, right? The outer part are the highs, the lower part are the lows. Now, for the outer part, remember the swing highs and swing lows we mentioned before? It applies here as well. Now, look at this. You see that there's a high point here, there's a high here, there's a low here, a high, a low, a high, a low, a high, a low, a high, a low, high, a low, like that. Now, the market is just going downwards. So these are what we call swing highs, and these are swing lows. This is the outer part of the chart. That's why they are called highs. This is the lower part of the chart. That's why they are called lows, right? So this is how you identify a downtrend. And when you're in a downtrend, the bigger opportunities are always sell trades. Not that there are no buy trades. There are buy trades. Imagine, we can see price rallied here, moved up 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 here. Yeah. But the bigger opportunities remain sell opportunities. Not that you can't buy if you're skilled enough in the market, if you are knowledgeable enough to know when to get on buy trades, you will still make some money. But if you don't, it's advisable to stick with the sell trades, because the sell trades you can hardly, if you're in a downtrend, you can hardly go wrong with sell trades. You can hardly go wrong, but you can go wrong with buy trades because you are trading against the trend. That is an against the trend type of trade. And when you are trading against the trend, we said the trend is not your friend. The trend can't be your friend when you trade against the trend. Okay. Now, there is another type of trend. There's another type of trend we call a consolidation. It's another type of trend we call a consolidation. So we talked about an uptrend, a downtrend. There's a third type of trend we call consolidation. The consolidation, right? So let's look at that. Now, usually when you come to the market, you will see sometimes you will see price like this. You see price like this. You see price doing this. This is what you call a consolidation, usually a sideways movement. So you have uptrend, you have downtrend, you have a sideways movement, consolidation. Now it's a type of trend as well. But the only thing with this one is that the way to trade it is something you have to watch, you have to be careful. I'll show us the way to trade this kind of trend. Now, first of all, to understand this kind of trend, we need to understand what we call support and resistance. Okay. Now, when you think about where you are right now, I'm sure all of us here on this call right now, we are sitting in one room or the other. We are sitting in one room or the other, right? We're sitting inside one room or the other. And then we are sitting mostly on the floor, or you are sitting on a chair that's sitting on the floor. And then above you is a roof. Might be in a story building or in a building that's not a story building, really doesn't matter. But you are in a building that has a floor and a roof, except you're sitting outside, right? But if you're in a building, you have a roof and a floor intact, right? Now, when you take a volleyball and you smash it very hard on the floor, very likely it will bounce up, hit the roof, come down, hit the floor, bounce up again, hit the roof, come down, hit the floor, like that, until the momentum drops. When the momentum drops, then that's when that's when the ball will settle. That is exactly how it is in the market as well. So price is usually bouncing between two levels. Bounce, there's a resistance, there's a support. There's a resistance, there's a support. There's a resistance, there's a roof and there's a floor. There's a roof, there's a floor. There's a roof, there's a floor. So this is what we call a floor here. There's a roof here. So we call this a roof, and then we also call it a resistance. Resistance. So this is a resistance or a roof. Okay. And this is a floor or a support. Support or floor. Okay. So just like that ball is bouncing, that ball I mentioned, just the way it's bouncing from roof to floor, roof to floor, roof to floor, that's the same way price does. Price is always bouncing from one roof to another floor, from one roof to another floor, like that. So typically, on a general note, price tends to rise from the floor, just like when a ball hits the floor and it bounces up. That's the way price does. When price hits a floor in the market or a support in the market, it bounces up, which means that it buys. When price hits a floor or a support, it will buy from there. When price hits a roof or a resistance, it will drop from there, which means it's a sell. We say we sell when we expect the price to drop. We buy when we expect the price to rise. So price rises from support and it falls from resistance. Price rises from support and then falls from resistance. Okay. So now what that is telling us is that we might be able to predict, we might be able to analyze the market and determine where the market is likely to sell from. Remember, what is our goal? Our goal is to find areas in the market where we can buy and sell to make a profit. That is what we are doing. That's what analysis is. Looking for areas in the market where you can buy and make profit, sell and make profit. That's what you're looking for, right? So since that's what you're looking for, so it's important that if you get any clue, or if I get any clue as to where price might sell from, or where price might buy from, then it's an important thing, it's a virtuous thing. If I know, oh, price is going to sell from here, then that's good. That means I can position myself to sell from there as well. If I have an indication that price is likely to buy from here, then I'll position myself to buy from there. Because this is sentiment. This is how the market works. It works by sentiment. By the time you look into the market and you are expecting price to buy, at around that area where you are expecting price to buy, there are another millions of traders who are expecting price to buy from the same zone as well. So it becomes a self-fulfilling prophecy. As you are buying, another 2, 3, 5, 10, 100 million traders across the world are placing buy trades from that level. And what happens? When everybody is buying something, is the law of supply and demand. The market works by supply and demand, right? When there's a huge demand, this area also is called a demand zone. This floor or support is called a demand zone, because usually when there's a huge demand, price rises. So around this area now is an area of demand. That's why price will rise from there. When a lot of people are trying to get their hands on something, they are trying to buy something, they know that, oh, let me buy because I know the price will rise. Eventually, the price rises because there are a lot of people buying. There's a lot of buy volume there. There's a lot of buy volume. That's the reason why price is rising. Then when it comes to the support, the resistance here or a roof, there's a lot of sell volume. That's why price is selling. There's a lot of sell volume. Okay. So this is what we mean by a sideways movement. When price is stuck in a place like this, we call it a sideways movement, or we call it a consolidation, or we call it a range. The market is ranging. The market is in a range. When market is in a range like that, how do you trade? How do you trade? We said that when you're in an uptrend, you mostly look for buy trades. When you're in a downtrend, you mostly look for sell trades. But if you're in a consolidation, what kind of trade are you looking for? When you're in a consolidation, what kind of trade are you looking for? So what we are looking for here, remember, what we are always looking for is what kind of trade is going to give us the best opportunity. Because you don't want to, there are many opportunities in the market that may be high risk, low reward. High risk, low reward means that you can look at where market is going to go from where you are buying or selling. You can look at where the market is going to go and you're like, oh, this thing is not going to go far. Let's say price is coming down like this, right? Price is here. Price is here currently. Price is here currently. And then you are expecting that price is going to go from here to here, right? Because this is a support level. So you expect that price is going to come from this area here. Price is going to come from this area here all the way to this area. That is what you're expecting. Now the question is, if price doesn't go this way and it now turns around, what is your potential risk? When you look at it, my risk and my reward, which one is bigger? If your risk is bigger than your reward, that's not a good trade. If your risk is bigger than your reward, that is not a good trade. So that is a trade that has low reward and high risk. And as a businessman, I know that many traders don't think of themselves as businessmen, but as a businessman, the best way to do business is not to enter the business with your money that has low reward and high risk. High risk, low reward. That's not a very smart way to do business. So since that's not a very smart way to do business, and as traders, we are business people, so we also need to be careful so that we don't start putting our monies into opportunities that have low reward. Remember, every trade you take is a risk. Every trade you take is not just a risk, it's an investment. You want to make sure you're making the best investments with your money. You want to make sure you're making the best investments with your money, right? So question, how do you trade. Again, we buy more, we find more buy opportunities in uptrend, find more sell opportunities in a downtrend. What do we do in a sideways trend? So there's something that happens in a sideways trend, and that thing is what we call a breakout. So you see that price is trapped inside this range now, trapped, literally trapped inside this range, right? Now, what price is going to do after a while is that price will eventually break out this trend, pull back, and continue. So let me explain this now. So what price will likely do to give you bigger opportunity in the market is to do what you call a breakout. When price breaks out of the, look at this range can be very small. Now, of course, this range can be also very big. You are looking at the market from a larger time frame. But if this range is not very big, you want to make sure that you understand that the bigger opportunities you have are outside of the trend. Outside of the trend. Because remember, the trend, outside of the range. The bigger opportunities you have are outside of this range here. So you know that you need to be watchful because the opportunities I have are outside. Why? Because this range is so small. I can't expect to buy at the bottom, sell at the top, buy at the bottom, sell at the top. It's not, market is not moving properly. All right. The range is too small to set a target to make a lot of profit from that. Because one way you make money in the market is if you let your trade run. You let your trade move from a very low point to a very high point, or you place a sell trade and the price drops very heavily. That's how you make good money, right? That's how you make big money. Of course, in addition to your lot size, your capital, and all that matters. But you want to make sure you capture a sizable move in the market, a sizable move in the market. That's what you're trying to do. So market price will break out of the range either to the top or to the bottom. So for the bottom, it can break out like this. So it can break out like this. It can break out like this. So it's either breaking out to the top or breaking down to the upside or breaking down to the downside. When it breaks down to the downside, that tells you that there's opportunity for a sell, a massive sell is coming. So you will be setting up yourself for a sell here, which means you are going to capture a sizable move to the sell side. You're looking to sell. If it breaks out from the top, you know that you are looking to buy because you're going to capture a sizable, massive move from the top. So you don't just localize yourself here. So the best way to trade in a range is to wait for a breakout. To wait for a breakout. When price breaks out, then now you are seeing clarity. Because within this range, I'm not very clear what's going to happen. If I make a sell here now, what if it breaks out? What if the risk is always paramount in your mind? Always paramount in your mind. But when price breaks out, what it has done is it has created a scenario, a situation for you where you can minimize your risk and maximize your reward. When price breaks out of a range like this, it's creating a scenario for you where you can minimize your risk and maximize your result. How do you do that? When price breaks out of this, when price broke out of this area now, see, that is the resistance there. Price broke out of it. When price broke out of it, what happened? It came back to retest it. It came back to touch it again. So that is what we call a pullback. This now is what we call a pullback. This is what we call a pullback. This is what we call a continuation. So price breaks out. This is what we call a breakout. Breakout. This is a pullback. Pullback is a continuation. So when price breaks out of a range like this, you're expecting it to buy because it broke out from the top. So it's a bullish breakout. So when price pulls back to come and test hit the entry, the area it broke out for, it will have turned this resistance to a floor, which means that the price is going to bounce off of this floor, bounce off of this area that used to be a resistance. It's been a resistance before. Now it has turned into a support. Price is now going to hit it and then bounce. And then price is going to hit it and bounce. So what happens now is this. This is your area of entry right here now. This is where you enter the market. This is where you enter the buy. This breakout gives you an idea, indication that you should be buying, but the where you enter the buy is actually here. When the market pulls back to the area that it broke out. When the market pulls back to the area that it broke out of, what happens is that you enter that trade for a buy. Your stop loss, which is your risk, is going to be minimal. It will be just very minimal, just somewhere below the entry of that trade. And then you're able to catch a massive risk to reward. Massive risk to reward. You make a lot of money from that. If it's a break to the downside, once it breaks out, it is going to pull back. This is a pullback, like we said before, is a pullback or a retest. So it breaks out, it pulls back to the area that it broke out of, pulls back to the area that it broke out of, it broke out, it pulls back to the area that it broke out of, and it continues downwards. Now, your area of entry is wait for price to break out, then let it come back to the area that it broke out of, this area here. This is the area it broke out of. Let price retest or come back to this area that it broke out of, then you now sell. When you place a sell here, your stop loss is just going to be somewhere above here. Just a minimal risk is what you're taking. It means that you can maximize the reward on this trade. Whenever price breaks out, I see it as a market doing us a favor. Market is doing you a favor. Market is telling you what it's going to do next. When market breaks out to the upside, it's telling you, guy, I'm ready for you to buy. And when the probability of you making a very profitable trade when you see a price breakout is very, very high. Very, very high. It's one of the most reliable ways to trade in the market. Not the only one, but one of the very reliable ways to trade in the market. Breakout, pull back, continue. Breakout, pull back, enter the trade, continue. Breakout, pull back, enter the trade, continue. It's one of the most reliable ways to trade because it plays into how the market actually works, how the market actually functions. It plays into that. All right. So this is how you trade breakout. This is how you trade a consolidation. All right. Now let's look at something. I was showing this to some people this afternoon. I was showing this to some people this afternoon, and I was saying that this is something I'm seeing. I want to just use some of the things we learned here today to try and understand this market. Now, when you look at this, this was just like a few hours ago. Now, look at this now. When you look at this, you see that this is gold. This is a gold trade. It's a gold chart. And market is buying. Market is buying. The market is buying. It's an uptrend. You can see it it's an uptrend. With your eyes, you can see that this is currently an uptrend. Price is rising. And if I go to a higher time frame, you see that market has been buying for a long time. Market has been buying. It has been in an uptrend for a while. Let's go to daily chart. Right? Look at it. Market has been a serious uptrend for a while. Right? So the outlook still remains bullish for gold. Outlook remains bullish for gold. And when we look at this, we can see that this is basically an uptrend, right? Now, once you've seen that this is an uptrend, we're looking for mostly buy trades, right? So what you are looking for now is where is the support that I'm going to buy from? Where is the support? Where is the support I'm going to buy from? Now look at this. When you look at this area now, these are swing highs. These are swing highs. So this area now is what we call a resistance. Before, we had a resistance here before. Price broke out of the resistance and started going up. We had a resistance here before. Price broke out of the resistance at this point, and started going up. Now we have a support here. This is a support here now, right? This is a support here now. This is a support here. This is a resistance here. Now, price broke out of it. What happened? Price is coming down to that area where it broke out of now to start buying. This might not be a very good example. Let me see if I can get another one. Let's see if I can find this. So let's look at this right here. What I'm trying to find is previous support resistance. So you can see that this here is a support. This here was, not is. This here was a resistance. This is a resistance. This was a resistance. It's not currently a resistance. This was a resistance, a support. Then you see that price broke out of it. Look at price broke out of it, broke out of it. And then when it broke out of it, what happened? It made a pullback where it broke out of, and then it continued down. That is continue down. Look at that move right there. That is how the market works. For some of us who don't understand this support and resistance, how do you get there? How do you begin to understand it? Let me go to the gold chart. The first thing you have to do on this gold chart is to identify these areas of swing here. These swing highs and swing lows. You start to identify these areas here. These swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. This is the first thing you start with, right? Yeah. Now, in another class, I'm going to discuss support and resistance in depth, right? How you draw it and all of that. But this is where you start from. You start by identifying these areas, these support and resistance areas, these areas of swing highs and swing lows, and you find a way to connect them. You find a way to connect them. You see that you can connect this whole area together, right? So you find a way to connect them. Once you connect them, you find you've had a resistance. Now, for the support levels, sometimes both all of them may not tally. Like in this case, now you can see that there's a support level here, there's a swing low here, a swing low here, a swing low here. And what you're trying to do most of the time is you're trying to connect or three areas where market is, where there's a swing low or a swing high, right? If you look at this now, you look at this point, look at this point here, you look at this point here, you look at this point here. All of these areas are closely connected. They are closely related. So if you put a line across, just like the way I did here now, that gives you a support, right? So when you do this on any chart, you can do this on any chart at all. Any chart at all, you see what I'm saying? It's the same thing. Okay? So when you let's look at this top now. You see something here. You see this area, there's a swing high, there's a swing high, there's a swing high. That gives you a resistance right there. That gives you a resistance zone right there, right? Now, when it comes to a support zone here, you first of all come here and you find where are the support levels. This is a swing low, this is a swing low. You start by finding swing lows. This is a swing low, and then you are able to take something. You are able to connect these swing lows together. Once you connect it together, that gives you a support. When you connect those swing lows together, that gives you a support. So when you identify a resistance, find swing highs, connect identify swing highs, find a way to connect them together, identify swing lows, find a way to connect them together. That gives you a support and a resistance. And once you've done that, now what you are looking for is, am I going to get a breakout or am I going to get a trade within it? It's either you are trading within the resistance and support, which you said earlier, or you are trading breakout. We said the best opportunities are inside breakouts. Now, if you look at this here, now I'm trying to do this in hindsight because the only way I can show it to you actually is in hindsight. Or this area here, this is an area here, this is a support level here, this is a support level, this is a swing low, sorry, not support. This is a swing low, this is a swing low, this is a swing low, right? Now, if you take price, if you take a horizontal level here and you go through that, you discover that that is a support level. What price did was price got there and bounced off and then broke out. Once it broke out, let's see that. Once it broke out of it, you see how price pulled back. You see how price broke out of it. Then see how it pulled back into it, into that breakout area, and then price continued downwards. Now it has hit a support again now. It's buying from that support. See? So basically what you are looking for in the market is start by identifying, first of all, when you come to a chart, look at this chart. Look at it broadly and ask yourself, am I in an uptrend or in a downtrend? Am I in an uptrend or am I in a downtrend? When you see an uptrend, okay, the next thing you want to see is this. Okay, I'm in an uptrend. I'm looking mostly for buy trades. What exactly, where are my swing highs and swing lows? You mark out your swing highs and swing lows, just the way I'm doing now. Mark out your swing highs and swing lows. Then what you want to do is attempt to connect them. When you connect swing highs, it gives you a resistance. You connect swing lows, it gives you a support. Now you start to work from there. Because when price hits support, it will bounce, which means it will buy. When price hits resistance, it will bounce, which means it will sell. Now, if the range is so small, which means the consolidation is so small, right? What you wait for it to break out, wait for price to break out. Once price breaks out of it, you get an opportunity to make your trade. This I am saying here requires you to practice a lot. It requires you to go back to the chart after this class and then practice a lot. Try to understand this. We're going to have this recording sent to you guys. Practice this a lot and understand it. When you understand it, you understand it better by practicing it. Okay? When you practice it, then you will catch it. And when you catch it, you'll be able to come to your chart and be able to use this for any instrument at all. Any instrument at all, you can trade it with this and make money with it. Okay. Who has a question? Who has a question for me? Who has a question? You have a question? Give me your question. You have a question? Give me your questions. Does anybody have a question? Know that sometimes when you just learn a new concept, you may not have a question yet. You may not have a question yet, but what you just need to do is sit down and try to understand it better and catch it better. And then you probably yes, Mohammed Kabiru. Mohammed Kabiru, yeah. I'll ask your questions.
My question is that how like which like charts do we use to like do this kind of analysis?
What kind of chart?
Yeah, I mean maybe is it like we are using the chart on the app or we have like
Yes, you can do it. You can do it. Yes, you can do it on Trading View here. You can do it on Trading View here, or you can do it on your MetaTrader 4 app, MetaTrader 5 app, whichever one. You can do it on your MetaTrader 5, or you can do it on TradingView. But TradingView, all you just need to do is go to your website, go to your browser and look for tradingview.com, tradingview.com, tradingview.com. If I open it to still go back to my chart because I have it open. This is what I have. If you go there, you still see tradingview.com. Yes.
Thank you.
So it's either you use TradingView or you use MetaTrader 5.
Thank you very much, sir.
Who has a question? Who has another question? Anybody have another question? Has another question? Yes, Mohammed Kabiru.
My question is that how much is like the best like price for you to like equity, I mean equity on your account
Yeah.
for a beginner like myself. Like how
Okay.
much will I charge my account?
Now, for a
You
beginner
know,
like you, I would say start with like $100. $100 is good. Yeah,
no problem.
$100 is
Thank you very much.
good. Anybody else with a question? Anybody else with another question? In the absence of any other question,